Senator Lee, who will be followed by Senator Kane.
Thanks so much, Mr. Chairman. Thanks to each of you for being here. Based on the title of today's hearing, one might think that America's wealthiest taxpayers are just robbing or constantly shortchanging the U.S. Treasury. This is exaggerated, and it's ultimately inaccurate. It's a disingenuous claim that's used as justification for pursuing a historic expansion of federal spending and a radical redistributive economic policy agenda that would make FDR and LBJ blush. Now, let's be clear. For obvious good reason, tax evasion is very much illegal under our federal tax code. It's illegal, it's wrong, and it's to be discouraged and punished whenever it's found. Many of my colleagues on the other side of the aisle frequently conflate, perhaps knowingly, perhaps not, illegal tax evasion, which has a technical meaning under the law, with legal measures that taxpayers may use legally to reduce their tax liability. There is a difference between those two things, and those things matter. And by all means, we should debate whether some of these tax expenditures, such as the SALT deduction, ought to exist and to what extent they ought to be recognized. And instead, many in today's Congress and in this administration have called for confiscatory tax policies that are either unconstitutional, such as the wealth tax, or unjustifiable and extremely complex proposals that seek to tax gains that have not yet been realized as income. Those, I would add, are almost certainly unconstitutional themselves. So when it comes to so-called tax fairness, it's definitely worth remembering. The U.S. tax code has been and continues to be undeniably very progressive. Let's look at the most recent Treasury Office of Tax Analysis estimates on the national individual tax burden. Those show us a few things. They show us, for example, that the top 1% of U.S. taxpayers earned roughly 20% of all income nationally, and while earning roughly 20% of all income nationally, paid 42% of total federal income taxes. So this group's average federal income tax rate was 22%. The bottom 50%, on the other hand, earned 14% of all income nationally and paid negative 5.5% of total federal income taxes. This group's average federal income tax rate was negative 6.3%, meaning net federal tax burdens on average are actually negative for the lower half of American taxpayers by household income. In other words, they're getting more back through refundable tax credits than what they pay in. If this isn't evidence of an overwhelmingly progressive federal tax system currently in place, I don't know what would be. I don't know how it could be more progressive than that within our system. Even if we look at the distribution of the federal tax burden in a broader way by including the payroll tax burden, the federal tax code remains overwhelmingly progressive. Another inconvenient truth that some of my colleagues like to omit while making claims of how desperately we need more tax revenue is that federal tax revenue as a percentage of GDP was 19.6% in 2022. This is unusually high. In fact, this is the second highest level in the last 60 years, and about 2 percentage points higher than the historic average during that time period, even during periods when the top marginal tax rate has been much, much higher, like well into the 70s. Ironically, this explosive growth in revenue was driven in large part from significantly higher than expected income tax collections from realized capital gains. Regrettably, spending in 2022 as a percent of GDP was still 5 percentage points higher than the historical average. Further, federal revenues have averaged 17.3% of GDP over the last 10 years, in line with the 60-year historical average of 17.4%, but federal spending has averaged 23%, way above the 60-year historical average of 20%. And that's only projected to increase, thus creating many of the problems that we've got. Mr. Edwards, in your written testimony, you mentioned that while tax enforcement is certainly a worthy goal, the $80 billion of additional mandatory funding for the IRS is excessive. Can you describe some of the reasons why This was an unnecessarily large funding boost for the IRS, and perhaps some of the unintended consequences likely to result from it.
Well, let me start by saying I agree with what Senator Merkley was saying and what you're saying about fairness. We all want fairness. I just think by going to the enforcement lever first, you're putting the cart before the horse. The better way to improve tax compliance, increase fairness for everyone, is to simplify the tax code, improve IRS customer service, improve their IRS technology, and that way we'd boost tax compliance and would be good for taxpayers and the economy. Enforcement is a win-lose proposition, especially when the tax code is so complicated. It creates a lot of collateral damage on businesses and individuals who are already paying the proper amount.
Well, no, that's right. Let's see, my time's expired. It is worth noting here again, even when our top marginal rates were sky high, we still weren't departing meaningfully. We still weren't reaping more than the historical average of just under 17.5% of GDP. So that candle can only be burned so many ways. It doesn't make that big of a difference on that end and can reduce compliance and therefore ultimately reduce revenue. Thank you.
Thank you, Senator Lee. Senator Kane.